Sir, please start.
Okay, thank you. So, good morning to all of you students. And today in the management accounting, we are going to do standard costing, variance analysis, and variance analysis is supposed to be one of the critical topic. So, for your management accounting is concerned. So, in standard costing, what is actually done? A standard cost card is prepared well in advance. The standard cost card is nothing but it is a sheet of paper where we are going to project all elements of cost and we calculate the standard cost per unit of the finished product. And it is comprising of direct material, that is number of kgs, that is multiplied by per unit price in kg, so that we calculate what is the standard material cost per unit. Similarly, in the context of labor, we are going to take time required to produce 1 unit in terms of standard multiplied by direct wage rate per hour, that is going to give us the direct labor cost per unit. Variable overheads, next item we are going to consider, that is number of hours required per unit multiplied by standard variable overhead rate per hour, so that we can get standard variable cost per unit. And fixed overhead, we are going to have budgeted fixed overhead divided by budgeted units, so that we can have standard fixed overhead rate per unit. And if we add direct material cost per unit, direct labor cost per unit, variable overhead cost per unit, and fixed overhead cost per unit, then we get the standard cost per unit manufacture 1 unit of finished product. And in variance analysis, we are classifying these variance analysis. So for the cost variances are concerned, under three major heads. First one is direct material, second one is direct labor, and third one is overheads. And again, overheads are segregated into two parts. One is variable overhead, other one is fixed overhead. Now, in the context of variance analysis, when we are talking about material cost variances, then there are certain inputs which are required that you have to work it out in the form of working notes, and then you should proceed to solve the various material cost variances. Now, before coming into detail, so far the material cost variances are concerned, we are required to know certain thing so that we can easily calculate the material variances as per the problem that will be given to you. Now here we are going to have first actual quantity of material consumed. That is called actual quantity, and that we can find it out taking into consideration opening stock of materials With that, we are going to add net purchase of raw materials and going to deduct closing stock of raw materials. Then we get actual quantity of material consumed. Now, actual output we can calculate in different ways. As actual output means the actual quantity or actual units, and that we can calculate taking into consideration sales of finished goods plus closing stock of finished goods plus closing stock of equivalent units of work in progress, that is to the extent of material supplied, minus opening stock of finished goods minus opening stock of equivalent units of work in progress to the extent of material supplied. Or we may calculate it taking into account number of weeks multiplied by number of working days per week. Again, it is multiplied by number of working hours per day. Again, multiplied by number of workers. And ultimately, to be multiplied by output per man hour. Or we can calculate it in number of weeks, number of working days per week, number of working hours per day into number of workers, or time in hours to produce 1 unit of output. Or we may calculate it actual quantity of material consumed minus actual loss. Then our next is standard quantity of material for actual output. It is called SQ. That is standard quantity of material required to produce 1 unit of output that should be multiplied by actual output. Or standard input divided by standard output into actual output. Then we get standard quantity of material for actual output. Then we have to calculate revised quantity of material, that is RQ, where total standard quantity of material not is equal to total actual quantity of material. Then we are going to have revised quantity of material, that is RQ, that can be calculated by standard quantity of one type of material divided by total standard input of all types of materials, and that should be multiplied by total actual input of all types of materials. Then we get revised quantity of material, that is RQ. Now, in material variances, the first variance is direct material cost variance. In short, it is called DMCV. And that we are going to calculate taking into account standard cost of standard quantity of materials for actual output minus actual cost of actual quantity of material consumed. Or symbolically, standard quantity into standard price minus actual quantity into actual price. Now, direct material cost variance can be segregated into two parts. One is called usage variance, another one is called price variance. Now, direct material usage variance, in short, it is called DMUV, that we can calculate considering standard quantity of material, standard cost of standard quantity of materials for actual output minus standard cost of actual quantity for material consumed. Or we may calculate it symbolically, standard quantity into standard price minus actual quantity into actual price, or taking standard price common, that is standard price multiplied by standard quantity minus actual quantity. Then we are having direct material uh, yield variance, that is standard cost of standard quantity of materials for actual output minus standard cost of revised quantity of actual material consumed, or SQ into SP minus RQ into SP. Or if we take SP common, that is SP into SQ minus RQ, or average standard price into actual output minus standard output for actual input, where average standard price is equal to standard cost of standard quantity of all types of materials for actual output divided by actual output. And standard output for actual input is standard output divided by total standard input into total actual input, or average standard price multiplied by standard input minus actual input, where average standard price is equal to total, that is standard quantity into standard price or rate divided by total standard input. Standard input is equal to total standard quantity of all type of materials. Actual input is equal to total actual quantity of all types of materials. Now, coming to number 8, direct material mix variance. In short, it is called DMMV. That is standard cost of revised quantity of actual material consumed minus standard cost of actual quantity of material consumed, or RQ into SP minus EQ into SP, or we can take SP common, then SP into RQ minus AQ, or AQ into average standard price of revised mix minus average standard price of actual mix, where average standard price of revised mix is equal to standard cost of revised quantity of actual material divided by total actual input, and average standard price of actual mix is equal to standard cost of actual quantity of material consumed divided by total actual input. Then we are having number 9, direct material price variance. In short, it is called DMPV. That is standard cost of actual quantity of material consumed minus actual cost of actual quantity of material consumed, or we may say actual quantity into standard price minus actual quantity into actual price. Then if we take actual quantity as common, then actual quantity into standard price minus actual price, that will be your direct material price variance. Now, from 1 to 9 that I have discussed, this is for you, for how to remember, and you have to remember, that is how to remember this formulae. Okay, for that reason, I have actually given 1 to 9. These are the important things that you have to know. Okay, so it is for your academic interest and also for understanding how the variances are calculated. But in order to calculate the material variances, we are now going to apply this statement, that is statement showing the basic calculation for the computation of material cost variances. If you know this only, point number 10, that you will do. Okay, and in any material variances problem, you are going to prepare this statement that is statement showing the basic calculations for the computation of material variances. And remember, how many columns we are going to do? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 columns. And these 10 columns you have to compile. So far, the statement showing the basic calculations for the computation of material cost variances are concerned. In the first column, you are going to write type of material, and below that, assuming A and B are the materials, that you have to write, and below that, you have to write input, that is standard input, then less loss. That is the first column. In the second column, you are going to write SQ for AO, that is standard quantity for actual output. Then standard price. Then SQ into SP, that is standard quantity for actual output into standard price. Let it be 1. Then actual quantity. Then actual price. Then actual quantity into actual price. Let it be 2. Then actual quantity into standard price. Let it be 3. Then RQ, that is revised quantity. And then we are going to write standard quantity, that is revised quantity into standard price. Let it be 4. So the entire material variances will be based on these 4 items, that is standard quantity into standard price, actual quantity into actual price, actual quantity into standard price, and lastly, revised quantity into standard price. So you have to remember this chart. Even if you do not remember the previous things that I have told, this is sufficient, this is enough to compile the material variances. And accordingly, material cost variances will be 1 minus 2, that is SQ into SP minus AQ into AP. Then material usage variance will be 1 minus 3, that is SQ into SP minus AQ into SP. Then material yield variance will be 1 minus 4, that is SQ into SP minus RQ into SP. Material mix variance 4 minus 3, that is RQ into SP minus AQ into SP. And finally, material price variance will be 3 minus 2, that is AQ into SP minus AQ into AP. So, material cost, material usage, material yield, material mix, and material price variance we can easily calculate by preparing this statement for computation of material cost variances. And remember, we are required to work with SQ into SP, AQ into AP, AQ into SP, and finally RQ into SP. Now, we are required to verify our calculations in order to justify that whether the variances that we have computed is okay or not. So for checking, we are having material cost variance is equal to material usage variance plus material price variance. Again, material usage variance is equal to material yield variance plus material mix variance. Now, alternative formula for calculating material yield variance will be total, that is standard quantity into standard price, divided by total standard input, multiplied by total standard input minus total actual input. So that we are going to do, but item number 3, that is alternative formula, you are not supposed to use. Just restrict yourself so far verification, that is material cost variance is equal to material usage plus material price Again, material usage variance is equal to material yield variance plus material mix variance. Now we are coming to solve this problem. Just have a good look. It is given calculate all the material cost variances Now, it is given, calculate all the material cost variances from the following information provided by T Limited. Now, we are having standard and actual, that is material A, standard quantity is 60%, material B, 40%, and standard processing loss is 10%. Standard price per unit, 2010. Actual quantity and actual price are also given and actual output is given. Now, from this, what do you need? Because standard quantity in terms of percentages are given, so we are required to find it out. Standard quantity for actual output for material A and material B. Actual quantity is given. So, if after calculating it is seen that standard quantity for actual output, that is standard quantity, and actual quantity, that is AQ, are not same, then we are required to revise the quantity, that is called RQ. So, in basic calculation, we are going to first calculate standard quantity for actual output, SQ, that is material A, that is 60, because you see there is a standard process loss of 10%. So 60 by 90 into 90, that is 60, and 40 by 90 into 90, that is 40. So total is 100. Actual quantity is given 44 and 66. Total is 110. As it is seen, standard quantity for actual output and actual quantity are not same. Hence, we are going to calculate revised quantity is RQ, and that will be calculated on the basis of actual quantity divided by standard quantity into standard quantity for material A, that is 66, and 110 by 100 into 40, that is 44, so that we can have 110. Now, we are going to prepare the statement showing the basic calculations for the computation of material cost variances. Remember, you are having 10 columns that I have already told you. So in the first column, we are going to write type of material. Second column, we are going to write standard quantity for actual output. Then you write standard price. Then standard quantity into standard price. Let it be 1. Then actual quantity. Then actual price. Then actual quantity into actual price. Let it be 2. Then actual quantity into standard price. Let it be 3. Then revised quantity, that is RQ. And last but not the least, that is RQ into SP, that is number 4. So the type of material, we are going to write material A and material B. So standard quantity for actual output is 60 and 40. So that total input is 100, less loss 10%, that is 10. So output is 90. Standard price is given in the question. We write 20 and 10 and multiplying standard price with the standard quantity, we get 1,200 and 400. Then actual quantity is given in the question, 44 and 66. Total comes to 110. Actual price given 25 and 5. So actual quantity went to actual price, let it be 2. It comes to 1,100 and 330. We add this, it comes to 1,430. Then actual quantity into standard price, let it be 3. That is 880, 660. Then it comes to 1,540. Then revised quantity is 66 and 44. And revised quantity into standard price, if we multiply this, we get 1,320 and 440. The total comes to 1,760. So once you have compiled this, then we are going to calculate the material cost variance, that is 1 minus 2. That is 1 minus 2, that is 100 favorable, material B 70 favorable, total 170 favorable. Then material usage variance 1 minus 3, 320 favorable, 260 adverse. So 320 favorable and 260 adverse, total is 60 favorable. Then material yield variance 1 minus 4, that is 120 adverse and 40 adverse. So total comes to 160 adverse. Then material mix variance 4 minus 3, that is 440 favorable, 220 adverse. So total is 220 favorable. Then material price variance, it is 3 minus 2. We get for material A, it is 220 adverse. And for material B, it is 330 favorable. So total comes to 110 favorable. Now we go for the verification. Material cost variance is equal to material usage variance plus material price variance. That is rupees 60 favorable plus 110 favorable. So total comes to 170 favorable. It is checked. Then material usage variance is equal to material yield variance plus material mix variance. That is 160 adverse plus 220 favorable. That is 60 favorable. Okay. Alternative formula is not required. Now we are coming to our next sum. AB Limited has established the following standard mix for producing 9 gallons of product A. Now 5 gallons of material X at rupees 7 per gallon, it comes to 35. 3 gallons of material Y at rupees 5 per gallon, it comes to 15. 2 gallons of material Z at rupees 2 per gallon, it comes to 4. So total comes to 54. Okay. Now a standard loss of 10% of input is expected to occur. Actual input was as under 53,000 gallons of material X at rupees 7 per gallon. 28,000 gallons of material Y at rupees 5.30 per gallon. 19,000 gallons of material Z at rupees 2.20 per gallon. Actual output for a period was 92,700 gallons of product A. Okay. Now we are required to compute all the material cost variances. Remember, at the beginning, we are required to do certain necessary workings, and then we should go to prepare the statement of cost, and finally, after compiling the statement, we can calculate the variances. Now let us start. You see, basic calculations we are required to do. Total standard input required, that is 92,700. That is 92,700 is nothing but actual output for a period was 92,700 gallons of product A. And we are going to have AB Limited has established the standard mix for producing 9 gallons of product A. Okay, so we are going to have total standard input required 92,700 into 10 by 9, it comes to 1,03,000. Then standard quantity of material X for actual output, that is standard quantity, that is 50% into 1,03,000, that is 51,500. Then standard quantity of material Y for actual output, that is 30 by 100 into 1,03,000, it comes to 30,900. Then number 4, standard quantity of material Z for actual output, that is 20 into 100 into 1,03,000, it comes to 20,600. Total actual output consumed, it is given in the question, that is 53,000 gallons for X, 28,000 gallons for material Y, and 19,000 gallons of material Z. Remember, 5:3:2, that is 50%, 30%, and 20%. And on that basis, we have calculated standard quantity of material for X, material X for actual output, then standard quantity of material Y for actual output, and standard quantity of material Z for actual output. That we have calculated 51,500, 30,900, and 20,600. Total actual input consumed, it is given, that is, we are adding this 53,000 plus 28,000 plus 19,000, total comes to 1 lakh. Now you see, total standard input required is 1,03,000 and total actual input consumed is 1 lakh. Hence, we are required to calculate the revised quantity of material X, material Y, and material Z. And this revised quantity we termed is as RQ. Then we are going to have 1 lakh into 51,500 divided by 1,03,000. So revised quantity for material X, RQ, is 50,000. Revised quantity of material Y, RQ, that is 1 lakh into 30,900 divided by 1,03,000, it comes to 30,000. And revised quantity of material Z, RQ, it comes to 1 lakh into 20,600 divided by 1,03,000, it comes to 20,000. So all the information which are required, we have gathered. Then we are going to prepare the statement showing the basic calculations for the computation of material cost variances. Remember, you are required to compile 10 columns starting with type of material, then standard quantity for actual output, standard price, standard quantity into standard price, let it be 1, then actual quantity, then actual price, then actual quantity into actual price, let it be 2, then actual quantity into standard price, let it be 3, then RQ, revised quantity, and finally revised quantity into standard price, let it be 4. Because all the material variances that will be based on 1, 2, 3, and 4, that is SQ into SP, AQ into AP, AQ into SP, and RQ into SP. So firstly, we are going to fill it up. So type of material, we are going to write material X, material Y, material Z. So standard quantity for actual output from the workings we got. For X it is 51,500, for Y it is 30,900, for Z it is 20,600, and if we add, we get the total 1,03,000. Standard price is given 7, 5, and 2. So we get standard quantity to standard price. So for X it is 3,60,500. For Y it is 1,50,400. For Z it is 41,200. Total comes to 556,200. Then actual quantity that is given in the question, that is 53,000, 28,000, and 19,000. So we are going to jot it down: 53,000 for X, 28,000 for Y, and 19,000 for Z. So total is 1 lakh. Actual price is given 7, 5.30, and 2.20. So we get AQ into AP, that is 3,71,000, 1,48,400, and 41,800. Total comes to 5,61,200. Then our next column is actual quantity to standard price. That we have considered as 3. It comes to 3,71,000, 1,40,000, and 38. Total is 5,49,000. RQ, that is revised quantity, we have calculated. It comes to 50,000, 30,000, and 20,000. Total is 1 lakh. Then RQ into SP, that is number column, that is item number 4, 10th column. It comes to 3,50,000, 1,50,000, and 40. So it comes to 5,40,000. So once you have compiled this statement, now you are going to calculate the material variances easily. So material cost variance is 1 minus 2. So for X it is 10,500 adverse. For Y it is 6,100 favorable. For Z it is 600 adverse. So total is 5,000 adverse. Then material usage variance, we calculate 1 minus 3, that is SQ into SP minus AQ into SP. So we get 10,500 adverse, 14,500 favorable, 3,200 favorable. So total 7,200 favorable. Material yield variance we are going to have, that is 1 minus 4, SQ into SP minus RQ into SP. So for X it is 10,500 favorable, Y it is 4,500 favorable, for Z it is 1,200 favorable. So total 16,200 favorable. Finally, least but one, that is material mix variance. We calculate 4 minus 3. 4 is RQ into SP minus AQ into SP, which is for X it is coming to 21,000 adverse. For Y it is coming to 10,000 favorable. For material Z it is 2,000 favorable. So total 9,000 adverse. And finally, material price variance is 3 minus 2, that is AQ into SP minus AQ into AP. So for material X it is nil. Then material Y it is 8,400 adverse. Material Z it is 3,800 adverse. So total 12,200 adverse. So once you calculate all these variances, then you are going to check. That is material cost variance is equal to material usage plus material price variance. That is 7,200 favorable plus 12,200 adverse. It comes to 5,000 adverse. That we have calculated. Then material usage variance is equal to material yield variance plus material mix variance. That is 16,200 favorable plus 9,000 adverse. It comes to 7,200 favorable. Alternative formula is not required. Now, I'm going to say something to you, please listen. In material variances, actually, the first variance that we calculate, that is direct material cost variance. And in order to arrive at the cost, we have two components. One is quantity, other one is price. Here, quantity means what quantity we are going to consume. So, by analyzing the standard cost for actual production minus actual cost for actual production, we get the material cost variance. Then, material cost variance is segregated into two parts. The first part is material price, and the second part is material usage. Price is the difference between standard price and actual price. And remember, you are going to purchase actual quantity from in the market. Standard quantity is not available for sale. Okay, then usage is the consumption. It is the difference between the quantities that should be multiplied by price. Which price? That is standard price. Accordingly, we can calculate the direct material yield and direct material mix variance. Now we are coming to our next problem. Just have a look. The standard material cost for 100 kgs of chemical D is made up of chemical A 30,000 kgs at the rate rupees 4 per kg. Chemical B 40 kgs at the rate rupees 5 per kg. Chemical C 80 kgs at the rate rupees 6 per kg. In a batch, 500 kgs of chemical D were produced from a mix of chemical A 140 kgs at a cost of rupees 588, chemical B 220 kgs at a cost of rupees 1056, and chemical C 440 kgs at a cost of rupees 2860. Now, the question is, how do the yield, mix, and the price factors contribute to the variance in the actual cost per 100 kgs of chemical D over the standard cost? Okay. So, definitely, before compiling the statement, we are required to arrive or derive, whatever it may be, the factors that is going to help us to compile the statement. So, actual quantity for 100 kgs of chemical D, that is actual quantity, you can calculate 140 by 500 into 100, that is 28. Because standard mixed material cost for 100 kgs of chemical D is given. So virtually, actual quantity for 100 kgs of chemical D, that is actual quantity we get for A, 150 by 500 into 100, it comes to 28. Similarly, for B, 220 divided by 500 into 100, it comes to 44. And number C, that is 440 divided by 500 into 100, it comes to 88. Actual rate we can get easily, that is 588 divided by 140, it comes to 4.20. 1056 divided by 220, it comes to 4.80. And 2860 divided by 440, it comes to 6.50. Okay, so after computation of this, we are required to compile the statement showing the basic calculations for the computation of material cost variances. Again, we are going to compile 10 columns. As usual, type of material. Here, there are three types of materials, A, B, C. Then we get total input. From there, if we deduct loss, we get actual output. Sorry, standard quantity for actual output. That is standard quantity for actual output. It comes to 30, 40, and 80. 30, 40, and 80. That is 150. But output you have got 100. So 50 is the loss. Standard price is provided in the question in the form of 4, 5, and 6 rupees. Then standard quantity into standard price we get. We consider this as number 1. So we get 120, 200, and 480. Then actual quantity we have already compiled. That is, we have calculated. That is 28, 44, and 88. And this is multiplied by actual price. So we get actual quantity into actual price. It comes to 117.60, 211.20, and 572. Then we proceed to calculate EQ into SP, that is actual quantity into standard price. And we mention these as column 3, that is item number 3, that is 112, 220, and 528. Then revised quantity, we can easily calculate. Revised quantity, we can easily calculate as we have calculated before in the same principle, and it comes to 32, 42.67, and 85.33. And finally, RQ into SP, that is revised quantity into standard price, mentioned as 4, that is 128, 213.33, and 512. Okay, so all the information which are required for the for the calculation of variances, we have worked it out. And accordingly, material cost variance is 1 minus 2. For material A, it is 2.40 favorable. For material B, it is 11.20 adverse. For material C, it is 92 adverse. Total is 100.80 adverse. Material usage is 1 minus 3. For A, it is 8 favorable. For B, it is 20 adverse. For C, it is 48 adverse. And total, it comes to 60 adverse. Material yield variance 1 minus 4. Material A, 8 adverse. Material B, 13.33 adverse. Material C, 32 adverse. Total 53.33 adverse. Then material mix variance we can calculate. 4 minus 3, that is 16 favorable, 6.67 adverse, 16 adverse for C, and total 6.67 adverse. And price variance is 3 minus 2, that is actual quantity into standard price minus actual quantity into actual price, that is 5.60 adverse, 8.80 favorable, 44 adverse. So total comes to 40.80 adverse. So we can calculate, we can do the checking. Material cost variance is equal to material usage plus material price. That is 60 adverse plus 40.80 adverse. Total come to 100.80 adverse. Material usage variance is equal to material yield plus material mix. That is rupees 53.33 adverse plus 6.67 adverse. So total comes to 60 adverse. Now, RQ we are calculating. You see, revised quantity we are going to calculate in the same manner that we have calculated in the earlier problem. Okay, so revised quantity we have calculated in the similar manner as we have calculated earlier. Now we are coming to next type of problem. You see, SK Limited produces an article by blending two basic raw materials. The following standards have been set up for raw materials. Material A and B, standard mix 40% and 60%. Standard price per kg 4 and 3. The standard loss in processing is 15%. During September, the company produced 1,700 kg of finished output. The position of stock and purchases for the month of September is as under. Please try to understand the problem and then the solution. Material AB, opening stock on 1st September in kgs 35 and 40. Stock on 30th September 5 kgs and 50 kgs respectively for A and B. Purchases during September, kgs 800, cost is 3,400, and 1,200 kgs, the cost is 3,000. Now, we are required to compute the variances, that is material price, material usage, materials yield, material mix, and total material cost variance. Now, in the next line, it is given, assume first in, first out method for the issue of material. The opening stock is to be valued at standard price. Okay, so standard price is given rupees 4 for A and rupees 3 for B, and the opening stock is to be valued on the standard price per kg, that is for A it is rupees 4 and for B it is rupees 3. Okay, now remember we are going to apply first in first out method for the issue of materials. So that is the main consideration in this particular problem. Now we are going to do the basic calculations. So standard quantity of material A for actual output is 40 by 85 into 1,700. So it comes to 800 kgs. Now it is given, you see 40 plus 60, total is 100, minus 15% loss. So 85 is the ultimatum. Okay, and we are going to have 40 divided by 85 into 1,700. So it comes to 800 kgs. Similarly, standard quantity of material B for actual output, it is 60 divided by 85 into 1,700. So it comes to 1,200 kgs. Next, we calculate standard quantity of material A for actual output, SQ, that is 800 kgs, and standard quantity of material B for actual output, that is 1,200 kgs. Then total standard input, that is total standard input, that is 800 kgs plus 1,200 kgs, that is 2,000 kgs in total. Okay, now that is 800 plus 1,200, that is 2,000 kgs. Actual price of material A, that is actual price is 3,400 divided by 800, that is rupees 4.25. Actual price of material B, that is AP, is equal to rupees 3,000 divided by 1,200, that is rupees 2.50. Then actual quantity of material A for actual output, we calculate opening stock plus purchases minus closing stock. So we are having 35 kgs plus purchase 800, okay, minus closing stock. So closing stock, that is, just have a look, 5 kgs is the closing stock. So again I repeat, please try to understand. Actual quantity of material A for actual output, that is AQ, we calculate as opening stock plus purchases minus closing stock. So 35 kgs plus 800 kgs minus 5 kg, that is 830 kgs. Okay. Now we are going to have first in, first out. So we are having 35 kgs in our opening on 1st September. That should be priced at the standard price as per the requirement of the problem, that is rupees 4 per kg. Okay. And remaining 795 kgs, that will be priced as per the recent purchases. That is first in, first out. So how do you get opening stock plus purchases minus closing stock? So 35 kgs plus 800 kgs minus 5 kgs, total is 830 kgs, but it is to be priced under FIFO basis, 35 kgs at the rate rupees 4 and 795 kgs at the rate rupees 4.25. Similarly, actual quantity of material B for actual output, that is AQ, we calculate 40 kgs plus 1,200 kgs minus 50 kgs. Just have a look. 40 opening, closing 50, purchase 1,200. So how do you arrive at? That is 40 kgs plus 1,200 kgs minus 50 kgs. It comes to 1,190 kgs. At the beginning of the month September, we are having 40 kgs whose standard price is 3. It is given in the question. And as per the requirement of the question, we are going to value 40 kgs at the rate rupees 3. And remaining 1,150 at a price of rupees 2.50 per kg. So total actual input is 830 kgs plus 1,190 kgs. It comes to 2,020 kgs. Actual cost of material A, AQ into AP, is 35 into 4 plus 795 into 4.25. That is 3518.75. And actual cost of material B, that is AQ into AP, that is 40 into 3 plus 1,150 into rupees 2.50. It comes to rupees 2,995. Now, since total actual quantity and total standard quantity are not same, hence we are going to calculate revised quantity of material A for actual output, that is RQ, 40 by 100 into 2020, that is 80 kgs. And revised quantity of material B for actual output, that is RQ, 60 by 100 into 2020, it comes to 1212 kgs. Hope you have understood. Now look into the statement. We have written statement showing the basic calculations for the computation of material cost variances. Remember, we are having 10 columns that we have started, and we are having 10 columns only. So in the first column, we are going to write type of material, and we jot it down AB 800 and 1200. Total input is 2000, but total output is 1700. So 300 is the loss. Standard price 4 and 3. So we get SQ into SP 3200, and for B it is 3600. Actual quantity, that is AQ 830 and 1190. Total is 2020. So output is 1700, to 320 is the loss. Okay. AQ into AP we have already calculated. That's why I have kept AP column as blank. That is 3518.75 and 2995. Then AQ into SP, that is 3320 and 3570. RQ we have already calculated 808 and 1212, 1212. So RQ into SP, that is fourth item, 10th column, it comes to 3232 and 3636. Now you please look into the computation of variances, and please allow me 2 minutes. Just have a good look, material A, material B and total, and we are going to calculate the variances as I have told the earlier problem. Material cost, material usage, material yield, material mix, and material price. How do you calculate? Please look into this. Please allow me 2 minutes. Now, material cost variance, as usual, that is 1 minus 2. That is SQ into SP minus AQ into AP. So for A, it is coming 318.75 adverse. And for material B, 605 favorable. So if your actual cost of material is less than the standard cost, then it is said to be favorable. Otherwise, it is adverse. So total comes to 286.25 favorable. Material usage variance 1 minus 3, that is SQ into SP minus AQ into SP. So we get 120 adverse, then 30 favorable and 90 adverse. So your actual consumption, if it is more than the standard consumption, then usage variance is said to be adverse, or otherwise favorable. Material yield variance 1 minus 4, that is 32 adverse, 36 adverse, total 68 adverse. So if your actual yield is more than the standard yield, the variance is said to be favorable, otherwise it is adverse. Then material mix variance 4 minus 3, that is RQ into SP minus AQ into SP. So we get, if your actual price is more than the standard, then the variance is said to be adverse or vice versa. So 3 minus 2, we get 198.75 adverse, 575 favorable, and 376.25 favorable. Now, you can easily verify the same material cost variance is equal to material usage plus material price. And again, material usage variance is equal to material yield variance plus material mix variance. So, verification is done and it is at par with your variance is calculated. Now, we are going to another problem, and after solving this, we will proceed to labor variances. Okay. The question says the standard material cost of producing 200 units of textiles has been predetermined as 20 kgs of cotton at the rate rupees 30 per kg, 10 kgs of silk at the rate rupees 150 per kg. Actually, 300 units of textiles were produced. The position of stock and purchases was as under. We are having material, and under material we are having silk and cotton. Opening stock in kg is given 5 and 4. Price per kg is given 140 and 25. Purchases for silk 6 kgs, for cotton 50. Cost is 930 and 960. Then closing stock kg is given 2 and 1. Stock of materials is valued on LIFO basis, that is last in, first out. Weight of each unit is 100 grams. Calculate all the material cost variances. So, keeping this in our mind, we are going to do the necessary workings. Standard quantity of cotton, SQ, is 20 by 200 into 300, that is 30. And standard quantity of silk, that is SQ, that is 10 by 200 into 300, that is 15 kgs. Total standard input 30 plus 15, that is 45. Actual quantity of cotton, that is 4 kg plus 30 kgs minus 1 kg, same, that is opening stock at purchases less closing stock. Okay. Then actual quantity of silk 5 kgs plus 6 kgs minus 2 kgs, that is 9 kg. Total actual input 33 kgs plus 9 kgs, that is 42 kgs. Then revised quantity of cotton is 30 by 45 into 42, that is 28 kgs. And revised quantity of silk, that is RQ, 15 by 45 into 42, that is 14 kgs. Actual cost of cotton consumed 30 into 32 plus 3 into 25, that is 1035. And actual cost of silk consumed, that is 6 into 155 plus 3 into 140, that is 1350. Okay. So we have adopted the LIFO, last in, first out. So from purchase, we are going to value first, entire purchase, then definitely from opening stock, if any. So it is opposite to first in, first out. Now we are going to prepare the statement, that is statement showing the basic calculation for the computation of material cost variance. Remember, again and again I am repeating, you have to make 10 columns. And these you have to remember. Then we are having type of material, cotton silk. Output is 30, total input is 45, loss is 15. Standard price 30 and 150. So we get SQ into SP, let it be 1, 900 and 2250. Actual quantity 33 and 9, 42. Output is 30, so loss is 12. Actual price is not required because AQ into AP we have done, that is 1035 and 1350. Then AQ into SP 990 and 1350. Revised quantity we have calculated, that is 28 and 14. So RQ into SP becomes 840 and 2100. Then we are going to do the same, that is material cost variance 1 minus 2 for cotton 135 adverse, silk 900 favorable, so 765 favorable in total. Material usage variance 1 minus 3, that is 90 adverse, 900 favorable, so 810 favorable. Material yield variance 1 minus 4, that is 60 favorable, 150 favorable, and 210 favorable. Material mix variance 4 minus 3, that is 150 adverse, 750 favorable, so 600 favorable. And price variance for cotton, it is 3 minus 2, that is 45 adverse. For silk, there is no difference. So total comes to 45 adverse. Then material cost variance, material usage variance plus material price variance, we got 810 favorable plus rupees 45 adverse. It comes to 765 favorable. Then usage, material yield plus material mix, it comes to 210 favorable plus rupees 600 favorable. It comes to 810 favorable. Okay. Now, here also, you see a question is given, SB Limited manufactures BXC by mixing 3 raw materials. For every batch of 100 kgs of BXC, 125 kgs of raw materials are used. In April, 60 batches were purchased, were prepared to produce. In April, 60 batches were prepared to produce an output of 5,600 kgs of BXC. The standard mix, the standard and actual particulars for April are as under. We are having raw materials, and as we see, there are 3 types of raw materials, A, B, C. Standard mix in percentage, 50, 30, and 20. That is 5:3:2. Standard price per kg, 20, 10, and 5. Actual mix, 60, 20, 20. Actual price per kg, rupees, that is 21, 8, and 6. Quantity of raw materials purchased, 5,000, 2,000, and 1,200. Now, we are required to calculate all material variances. So, we are required to find it out as working note, total standard input required. That is 125 by 100 into 5,600. It comes to 7,000 kgs. Standard quantity of material A for actual output, that is 50 by 100 into 7,000, that is 3,500 kgs. Standard quantity of material B for actual output, that is SQ, 30 into 100 by, into 30 by 100 into 7,000, it comes to 2,100 kgs. Then standard quantity of material C for actual output, that is 20 by 100 into 7,000, that is 1,400 kgs. Total actual input consumed, 60 batches into 125, that is 7,500 kgs. Actual quantity of material A for actual output, that is AQ, 7,500 into 60 by 100 mixture, that is 4,500. Actual quantity of material B for actual output, that is 20 by 100 into 7,500, it comes to 1,500 kgs. Then actual quantity of material C for actual output, that is 20 by 100 into 7,500, it comes to 1,500 kgs. So we have already computed actual quantity of material A, actual quantity of material B, and actual quantity of material C for actual output. Now, as it is seen, the total actual quantity and total standard quantity are not same. Hence, we are required to compile revised quantity for A, revised quantity of B, revised quantity of material C, as we did before in the same manner. Ratio is 50, 30, and 20. So 7,500 into 50 by 100, it comes to 3750. Again, 7,500 into 30 by 100, it comes to 2250 kgs. And revised quantity of material C for actual output, that is RQ, 7,500 into 20 by 100, it comes to 1,500 kgs. So all the necessary information we have got, then we are going to compile the statement. That is statement showing the basic calculations for the computation of material cost variances. Now, type of material, there are three types, A, B, C. Standard quantity for actual output, we have calculated, we add it, it comes to 7,000. 5,600 is the output, so 1,400 is the standard loss. Standard price we have provided 20, 10, and 5. So SQ into SP, we get 70,000, 21,000, and 7,000. Actual quantity we have computed 4,500, 1,500, and 1,500. It comes to 7,500. And 5,600 is the output. So 1,900 is the loss. So actual quantity we have calculated. Actual price is given 21, 8, and 6. So actual quantity into actual price, we get 94,500, 12,900. Then actual quantity into standard price, 90,000, 15,000, and 7,500. RQ 3750, 50 and 1500. So RQ into SP, 75,000, 22,500, and 7,500. Now, we are going to compute the material variances as usual, material A, material B, material C, and total. Material cost variance 1 minus 2, that is 24,500 adverse, 9,000 favorable for B, 2,000 adverse for C, so total is 17,500 adverse. Then material usage variance 1 minus 3, 20,000 adverse, 6,000 favorable, 500 adverse, 14,500 adverse. Then material yield variance. For A, it is 4 minus 3, that is 15,000 adverse, 7,500 unfavorable, and there is no material yield variance 1 minus 4, that is 5,000 adverse, 1,500 adverse, and 500 adverse. Total is 7,000 adverse. Material mix variance 4 minus 3. For material A, it is 15,000 adverse. For B, it is 7,500 favorable. But there is no mix variance. So far, material C is concerned. Hence, total is 7,500 adverse. And material price variance is 3 minus 2. That is 4,500 adverse, 3,000 favorable, 1,500 adverse. So 3,000 total it is adverse. Now, you are going to do the verification. Material cost variance is equal to material usage plus material price. So 14,500 adverse plus 3,000 adverse, it comes to rupees 17,500 adverse. And material usage variance, material yield plus material mix, that is rupees 7,000 adverse, rupees 7,500 adverse. Total is 14,500 adverse. Total device quantity, there is actual number of batches used into standard quantity of each batch. Now, next problem, I'm just discussing it. Then we have to go to labor. Standard set of material consumption was 100 kgs at the rate rupees 2.25 per kg. In a cost period, opening stock was 100 kgs. Purchases made 500 kgs at the rate rupees 2.15 per kg. Consumption is 110 kgs. Calculate usage variance. Next, price variance number one. When variance is calculated at point of purchase, when variance is calculated at point of issue on FIFO basis, and number three, when variance is calculated at a point of issue on LIFO basis. And the third question is, what is the effect on closing stock valuation when materials are charged out to cost on basis number two, that is FIFO, and number three, LIFO, as given in point number B. Okay, so I have covered more or less the types of problems that you may have, in the examination. There is varieties. Now, usage variance, we are going to calculate state-wise. Usage variance is standard quantity for actual output into standard price, standard quantity for actual output minus actual quantity into standard price. So standard price is 2.25, then standard quantity for actual output is 100, actual quantity is 110, we get 22.50 adverse. Next, price variance is equal to price variance is equal to standard price minus actual price into actual quantity. So that we get that is price variance, standard price minus actual price into actual quantity. So the point of purchase, it is 2.25 minus 2.15 into 500, that is 50 favorable. Then price variance at the point of issue, that is FIFO, first in, first out. So that is 100 into 2.25 minus 2.25 minus 2.25, that is 0. Then 10 into 2.25 minus 2.15, it comes to rupee 1 favorable. Then price variance at the point of issue, that is LIFO, last in, first out, that is 110 into 2.25 minus 2.15, that is rupees 11 favorable. Now, effect on valuation of closing stock, FIFO method. The closing stock will consist of 490 units, that is 600 units minus 110 units, valued at rupees 2.15 per unit, Thus, it will be valued at rupees 49. That is 49 into 0.10, less than the standard price. And LIFO method, the closing stock will consist of 490 units. 100 units will be valued at 2.25 per unit and 390 at 2.15 per unit. Thus, closing stock will be valued at 39. That is 39 into 0.10, less than the standard price. Okay. So, this is a type of problem. Now, we are having another problem. Calculate all the material cost variances from the following information provided by Jalan Limited. So we are having standard quantity kgs unit price. Standard and actual. Standard material is 60%, material B 40%. Unit price 20 and 10. Actual quantity 44 and 66. And actual price per unit 25 and 5. Standard closing loss 10%. Actual data relating to finished goods and work in progress. You see, by far, whatever problems we have discussed, we haven't faced the concept of work in progress. But here, we are having the concept of work in progress. So, actual data relating to finished goods and work in progress, which are given. So, work in progress materials fully supplied, but 40% converted. Opening stock 5 and closing stock 10. Finished goods 20 and 10. Actual sales of finished goods 95 kgs. Okay. So we are required to calculate all the material cost variances. Now let us start. Now we are required to do the basic calculations. Units completed, we can easily find it out by taking into sales plus closing stock minus opening stock. So sale is given 95, closing stock is given 10, okay, and opening stock is given 20. So units completed 95 plus 10 minus 20, that is 85 kgs. Now number of equivalent units of actual output for material cost purposes. So we are having units, degree of completion, and equivalent units. Completed units, that is 85. Degree of completion 100%, so equivalent units is 85. Closing work in progress 10. Degree of completion 100%, that is 10. Less opening work in progress 5. Degree of completion 100%, that is 5. So total equivalent unit comes to 90 kgs. Now we can easily calculate standard quantity for actual output, that is SQ, which is 60 by 90 into 90, because processing loss is 10%. It comes to 60. 40 by 90 into 90, that is 40. Total is 100. Actual quantity 44 and 66. Okay, so total is 110. Since standard quantity for actual output not is equal to actual quantity, hence we are going to calculate revised quantity, that is RQ. And RQ can calculate 60 by 100 into 110, that is 66. 40 by 100 into 110, that is 44. we get total 110. So this is a particular sum where you are required to calculate number of equivalent units of actual output for material cost purposes. Now we are going to have that 10 columns. That is type of material A, B, input, loss, standard quantity for actual output 60 plus 40, 100, output is 90, loss is 10. Standard price is 20 and 10. So SQ into SP 1200 and 400. Actual quantity 44 and 66. Total is 110. Loss is 20. It comes to 90. Actual price 25 and 5. That is 1100 and 330. Actual quantity into standard price 880 and 660. Then revised quantity we have already computed 66 and 44. Okay. So RQ into SP comes to 1320 and 440. Now we are going to have the computation of variances. So material cost variance 1 minus 2, that is 100 favorable and 70 favorable. So total is 170 favorable. Material usage variance 1 minus 3, that is 320 favorable. 260 adverse, so 60 favorable. Material yield variance 1 minus 4, that is 120 adverse, 40 adverse, 160 adverse. Material mix variance, that is 4 minus 3, RQ into SP minus AQ into SP. It comes to 440 favorable, 220 adverse, 220 favorable. Material price variance 220 adverse for A, 330 favorable for B, and total is 110 favorable. So verification we do, that is material cost, material usage, and material price. We have to add, we get 60 favorable and 110 favorable, that is 170 favorable. Material usage variance, material yield plus material mix, that is rupees 160 adverse plus 220 favorable, that is 60 favorable. Now I'm coming to a different problem. Compute the missing data indicated by the question marks from the following. Standard price per unit given, actual price per unit given, standard input in kgs given, 50 it is question mark for B, actual input kgs, question mark for A, for B it is given, material price variance, A question mark, B question mark, material usage variance, question mark and 300 adverse, material cost variance, both the cases question mark. But you are provided with a clue. That is material mix variance for both material together was rupees 45 adverse. So that is the one with which we have to proceed. Now let us come. Now basic calculation, standard input of B, that is standard quantity. So material usage variance, the formula is standard quantity for actual output minus actual quantity into standard price. Now material usage variance 300 adverse is given. Okay. Standard price is 15. Standard quantity you don't know. Actual quantity is 70. So standard quantity we calculate 50 kgs. Actual input of A, let actual input of A be X. Now again we are required to do 10 columns as usual. In type of material we are going to write A, below that B. Standard quantity for actual output 50-50. Standard price 12 and 15. Then SQ into SP, that is 1, comes to 600 and 750. Actual quantity for material A is X. We don't know. For B, it is 70. So total actual quantity will be 70 plus X. Then actual price 15 and 20. So actual quantity to the actual price, we get 15X and 1400. So 1400 plus 15X. Then actual quantity into standard price. For A, it is 12X. For B, it is 1050. So total is 1050 plus 12X. Revised quantity, as we calculate, 35 plus X by 2 and 35 plus X by 2. RQ into SP, 420 plus 6X and 525 plus 7.58. Total comes to 945 plus 13.58. Now, material mix variance, the formula is RQ into SP minus AQ into SP, that is 4 minus 3. And mix variance is given minus 45. That is adverse, we write minus 45. Then 945 plus 13.58 minus 1050 plus 12X. And we go for calculating X, we get 40 kgs. Now, once we have got all the necessary information for compiling the variances, so we can put it into the base table and we can find it out. That is type of material AB, standard quantity for actual output 50 and 50, that is 100. Standard price 12 and 15. Standard quantity into standard price 600 and 750. Actual quantity 40 and 70. Actual price 15 and 20. Actual quantity into actual price 600 and 1400. Actual quantity into standard price 480 and 1050. RQ 55 and 55 because it is same ratio 50 and 50. So RQ into SP 60 and 825, it comes to 1485. Then we go for to calculate the material cost variance. As usual, 1 minus 2. Material A having no material cost variance, but B having 650 adverse. Total is 650 adverse. Then material usage variance 1 minus 3. For material A, it is 120 favorable. For B, it is 300 adverse, and total is 180 adverse. Material yield variance 1 minus 4, that is 60 adverse, 75 adverse, total is 135 adverse. Material mix variance is 4 minus 3, that is 180 favorable, 225 adverse, so 45 adverse. And material price variance 3 minus 2, that is 120 adverse, 350 adverse, and 470 adverse. So, material cost variance is usage plus material price, that is 650 adverse. Now we are coming to our next sum. 1 kilogram of product K requires 2 chemicals A and B. The following were the details of product K for the month of June. Standard mix, chemical A 50% and chemical B 50%. Standard price per kilogram of chemical A rupees 12 and chemical B rupees 15. Actual input of chemical B 70 kilograms. Actual price per kilogram of chemical A 15. Standard normal loss 10% of total input. Material cost variance total rupees 650 adverse. Material yield variance total rupees 135 adverse. Actual output, let's see. Actual output 90 kgs. You are required to calculate number one, material mix variance in total. Material cost variance total will be you are required to calculate material mix variance total, then material usage variance total, material price variance total, actual loss of actual input of chemical A, and actual price per kilogram of chemical B. Okay, so this is a different problem. So we are having basic calculations. Just have a good look. Cost of standard mix of input, that is SQ, SP, that is SQ into SP. Chemical A 50, price is 12, SQ into SP is 600. Chemical B 50, standard price is 15, total SQ into SP is 750. Standard loss is 10, output is 90. So SQ into SP remaining same, that is 1350. Standard output for actual input. Now we are going to apply this formula. Total, that is SQ into SP divided by standard input into actual input minus standard input. So 135 adverse is given, then 1350 by 100 into x minus 100. So after solving, we get x is equal to actual input 110 kgs. Actual input of chemical A 110 kgs minus actual input of chemical B, that is 110 kgs minus 70 kgs, it comes to 40 kgs. Actual cost of actual output, AQ into AP. Material cost variance, SQ into SP minus actual quantity into actual price. So material cost variance is given 650 adverse. SQ into SP, 1350 minus AQ into AP. So AQ into AP becomes 1350 plus 650, it is 2000. Actual cost of chemical B, total actual quantity into actual price minus actual cost of chemical A. That is rupees 2000 minus 40 into 15, it comes to 1400. Actual price per kg of chemical B, that is 1400 divided by 70, it comes to rupees 20 per kg. Now, once we have compiled these, we can draw the statement. Type of material AB 50 plus 50, 100. Output is 90, loss is 10. Standard price 12 and 15. SQ into SP is 600, 750. AQ 40 and 70, that is 110. Output is 20, loss is 20. Output is 90, loss is 20. Actual price 15 and 20. Then AQ into AP is 600 and 1400. That is 2000. AQ into SP 480 and 1050. RQ 555. So RQ into SP 660 and 825. Okay. Then material cost variance 1 minus 2. Material usage variance 1 minus 3. Material yield variance 1 minus 4. Material mix variance 4 minus 3. Material price variance 3 minus 2. Now we check it. Material cost variance, material usage plus material price. Material usage variance, material yield plus material mix. Now, the specific questions which are actually being asked, that we are going to answer. That is specific answers to specific questions asked for. Material mix variance 45 adverse. Material usage variance 180 adverse. Material price variance 470 adverse. Actual loss of actual input minus actual output, that is 20 kgs. Actual input of chemical A 40 kgs and actual price per kg of chemical B rupees 20. So in this way we have covered entire material. Now let us talk to you about these variances. Now I have already shown you how to compute the material variances, and I have shown you different types of problems which may be asked in the examination. So the most important concept is, in order to compute the material variances, we are required to find out first the requirements which will be required to prepare the statement of cost table. So, of course, standard quantity for actual input, then actual quantity for actual output. Then, if total standard quantity and total actual quantity is different, then we are required to calculate revised standard quantity. Now, once you get all this information, then we are going to proceed and to compile the statement showing basic calculation or statement showing the basic calculations for the computation of material variances. And I have already told you that you are required to prepare the statement under 10 columns. And you are required to compute those items in terms of rupees by jotting down 1, 2, 3, and 4. As I have shown you in the process of computing the variances. And once you do this, you will be in a position to calculate all the variances 1 minus 2, 2 minus 1, 4 minus 3, like that. And once you do that, then you have to verify yourself the answers that you have arrived at through checking purpose to ensure that the solution is correct. So how? That is, material cost variance is nothing but it is the elements of two things, that is material price and material usage. Again, material usage can be segregated into two parts, that is material mix and material yield. So that in this way or in this manner, you can compute the various variances. Now, we are about to start the labor variances. Okay, just a minute, please. Just wait for a moment. Now, I'll be just taking into account the labor variances, and we'll be discussing today the items that you need to compile or to compute to arrive at the different lever variance. So in the computation of variance analysis, so far the lever variances are concerned, we are going to first know certain terms. There is actual hours AH paid or clock hours. That is number of weeks into number of working days per week into number of working hours per day into number of workers. Actual productive hours, number of weeks into number of working days per week into number of productive hours per day into number of workers. Idle hours, actual hours paid minus actual productive hours. Remember, there is an idle time in the context of labor, and laborers are paid for idle time also. But if you want to know the efficiency or efficacy of the laborers, then you have to deduct the idle time for computation of efficiency variance. Then actual output you can easily calculate as we have already shown in the materials. But here we are going to have hours and output per man hour or actual productive hours divided by time in hours to produce 1 unit of output. Then we go for calculating standard hours, that is SH, for actual output. That is actual output into standard labor hour per unit of output, or actual output into standard labor cost per unit of output divided by standard labor cost per hour, or actual output into standard hours by standard output. This is for your knowledge. Revised hours, standard hours for one type of labor divided by total standard hours for all type of labor multiplied by total actual hours of all types of labor. Then we proceed to calculate direct labor cost variance, that is standard cost of standard hours for actual output minus actual cost of actual hours for labor paid. Remember labor paid. Or we may write SH into SR minus AH into AR. That is standard hours for actual output multiplied by standard rate minus actual hours into actual rate. Now here, actual hours here mean inclusive of idle time. But when we are going to calculate the direct labor efficiency variance, in short it is called DLEV, then it will be standard cost of standard hours for standard hours of labor for actual output minus standard cost of actual hours of labor paid, or SH into SR minus AH into SR. We take SR common and it is the difference between SH and AH. Direct labor yield variance, that is standard cost of standard hours of labor for actual output minus standard cost of revised productive hours of labor. So that SH into SR minus RH into SR, or we can take SR common, SH into RH, or average standard rate into total standard hours minus total actual hours, where average standard rate will be total standard cost of standard hours for actual output divided by total standard hours. Total standard hours is equal to total standard hours for all types of labor, that is total SH. Total actual hours of all types of labor, that is total age, Then direct labor mix variance, we calculate standard cost of revised productive hours of actual labor minus standard cost of actual productive hours of labor paid, or RH into SR minus AH into SR, or we can take SR common, RH minus AH, or AH multiplied by average standard rate of revised standard mix minus average standard rate of actual mix, where average standard rate of revised standard mix is equal to total standard cost of revised standard hours for actual output divided by total standard input. Then average standard rate of actual mix, that is total standard cost of actual hours divided by total actual input. Then labor rate variance we may calculate standard cost of actual hours paid minus actual cost of actual hours paid, or age into SR minus age into AR. We can take age common, and it is the difference between the two rates, SR minus AR. Idle time variance, idle hours into standard rate, or actual productive hours into standard rate minus actual hours into standard rate. So SR multiplied by actual productive hours minus actual hours. Idle hours is equal to actual hours paid minus actual productive hours. Actual productive hours, actual hours paid minus idle hours. Now here, we are going to compile a statement, 10 columns, when there is no idle time. Type of labor, maybe skilled, semi-skilled, unskilled. Then standard hours for actual output, standard rate. Then SH into SR, let it be 1, then AH, then AR, then AH into AR, let it be 2, AH into SR, let it be 3, revised hours, RH, and RH into SR, let it be 4. And labor cost will be 1 minus 2, labor efficiency will be 1 minus 3, labor yield will be 1 minus 4, labor mix will be 4 minus 3, and labor rate is 3 minus 2. So, in this way, we are going to compute the various variances. But when there is idle time, then your statement will be extended. There will be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 columns, 2 more columns. Okay? Where we are having type of labor, SH for AO, that is standard hours for actual output, standard rate. Then SH into SR, AH, AR, AH into AR, that is 2. AH into SR, let it be 3. Actual productive hours into standard rate. Then revised productive hours, and finally revised productive hours into standard rate, let it be 5. So that we are going to continue in our next class. Hope you have understood material. And remember, standard costing is totally based on certain perceptions and certain concepts that we have discussed. And if you are going to prepare this statement, whether it is material or whether it is labor or whether it is overheads, so for the cost variances are concerned, even in sales variances, okay, you can compute all the necessary variances. So, in the next class, we are going to complete labor as well as overheads. And if time permits, then again I am going to show you the sales variances. With this message, I close for the day. Thank you for joining the session. Thank you very much.
Thank you, sir.
Thank you very much.